Hey, Trader Stephen here with TradersPlan.com. It is Friday, January the 14th. The market will be closed on Monday in observance of MLK Day. So I hope everybody has a nice Monday and gets a nice Monday off. Nice long weekend. So let's start with something that's not so nice, and that's really the markets are looking a little ugly right now. And you know, I'm gonna start with the S&P 500. It really is at a major, I could draw this kind of major trend line, and the Nasdaq, which we're going to look in a second, has already broke, but let me get rid of that. So if that could break, you had a nice bullish reversal on Monday. Okay, I'm in, right? It found support at trend line. I'm buying. I have to try to make this bounce, not knowing if it'll work or not. And then it popped yesterday, and then it got hit kind of hard, or it popped for a couple of days, and they got hit really hard yesterday, down 1.42%. Market's gonna open down. You know, I'm starting to believe that this is gonna crack. So I really think it makes sense to, you know, you just make sure your stops are in place. We'll kind of see how the market handles, but you know, so far it's not looking good, and maybe a deeper correction would be healthy for the overall market to reset. Now, on Tuesday's video, I made the bullish case and the bearish case. The bullish case is that the Nasdaq touched the 200-day moving average right there for the first time since April of 2020. Right, and bounced right off it in above average volume. That's the bullish case. So the bearish case is that it made lower highs and that it broke this kind of double bottom right here. So, and when I was doing that video, I said, look, it's possibly, if it does get out of here, it's going to bounce, sell off, and do something like that, or it could obviously do something like this. Right, so we don't know which one is which, but I believe it is going to open below the 200-day moving average. So we will just kind of wait and see which way the wind blows. But to me, it's looking kind of bearish right now. I'd probably expect it to take another leg down. And you know, when it hit resistance, I expected it to hit resistance, but you know, and I expected it to sell off a little bit, but yesterday's sell-off was just really hard. So again, I'm going to take it day by day, and if Monday's low gets undercut, I'm just kind of, all bets are off, and you really need to be cautious at that point in time, because tech is really underperforming. Banks and energy are outperforming. Inflationary environment, we're going to talk about that here in a minute, but you know, tech is it's just had a rough year. Even though it's been up, it has definitely been up, but it has been a very hard market to trade. There's just the constant whipsaw and choppiness. So let's look at some top ETFs of the week and kind of see what's going on here. The top ETF of the week is UNG, and on Tuesday's video I threw a buy on this, and man, it popped like 14% on Wednesday, and honestly I sold it into strength just due to the volatility, and you know, I'm glad I did, because the next day, yesterday, I just got absolutely slaughtered. I would not buy this pullback right here. I would really let it settle down. If it falls below the 200-day moving average, there's no reason to get back in it. So this is probably not the best opportunity anymore, just due to the pure volatility. However, something that did look pretty good, copper, it really broke this $40 level nicely on Wednesday. Now, if the market's coming under pressure, I would be cautious on buying pullbacks. I would let some of these stocks and ETFs prove themselves to you. So for example, if it busted through on Wednesday, and let's say it's going to be down a little bit or pull back for a few days, why not just buy it as it crosses back above here? You could buy the pullback 100%, but you would just need a really tight stop, right? If you were going to buy this pullback, you know, at the 200-day moving average, which is around 37.50 right there. If you're going to buy around there, you would need a really tight stop around 36. Like, don't let it get below that. So just kind of keep in mind, you would need a tighter stop. But copper really stood out of all the top 10 right, you can see that there is really a lot of Brazil, Peru, Chile, Latin American countries. Copper looks pretty good, and as commodities, the commodity cycle starts, usually emerging markets do better. Now, a lot of the individual countries don't really look that good, but you know, the Latin America ETF has been in a downtrend for a long time, and look at what it did. I mean, it broke out of a clear downtrend channel. However, I'm going to say what I just said. If it pulls back, which it likely will, based on the price action that's happening pre-market, buy it as it crosses back above this level. Don't try to catch a falling knife here, because this just could be a failed breakout attempt, especially if the market gets uglier. Be a little bit more conservative, right? So out of the top 10, I really think copper, and I think this is something to put on your watch list. I think copper is a little bit more actionable because it's a little bit, the relative strength is there, and it made it, in my opinion, a clear breakout, but I still would wait for this to happen. Okay, so copper looks good. More inflationary stuff. Wood, and this is something, this wood ETF, that's got a bunch of lumber stocks. This is something I called out a couple weeks ago that it was really setting up, and this week it really broke out, right? You could say there is a cup with handle pattern within this, or you can just say, hey, it's a deeper consolidation and it broke above 92. That looks pretty good, but again, if it kind of didn't hold yesterday, I would be cautious, and if you want to buy the pullback, that's fine, but it shouldn't go below 90. Okay, so if you want to buy the pullback somewhere in the zone, somewhere around 92, that's fine, with a tie stop around 90. Or you could, if it sells off just a few days, you could just absolutely wait until that happens, which is a more conservative way of looking at it. Right now, I'm really looking at buying commodities and banks on a pullback. I'm going to look at one more commodity that is looking really strong, that is extended. IEO, iShares U.S. Oil and Gas Exploration, looks really strong. Already broke out to a 52-week high. It is extended. I would definitely wait till this pulls back around the 65 level and see what happens. But because you don't want to buy this is kind of gone straight up. But I would definitely put this on your watch list. It needs a deeper pullback. Same thing with banks, right? And so really we're looking at commodities and banks in a nutshell. When you have an inflationary environment, you're looking at commodities and banks. Really, energy has led the commodities, has led all commodities as of the last 3-4 weeks. Banks have been leading the charge. Base metals, like we just looked at copper, is that they're starting, I think, to be second. You know, they're starting to kind of follow. But when you're looking for investment opportunities and you're like, okay, what commodities I buy? Precious metals are still looking bad. Don't just go out and buy gold just because inflation is high. Buy the leader, right? Energy is the leader right now. Base metals are starting to perk up a little bit, and banks need to pull back as well. So I'd say the most actionable items right now are probably copper, probably wood, but I would also be looking at IEO and KRE on a pullback, because those are definitely stronger than copper and wood. They're just a little bit more extended right now. So again, right, just be cautious with what the market is doing. Take it day by day. And if the market, I'll just kind of pull back up, the SPY really undercuts this low right here, I would just get out. Just forget about it. Get out. Let the market do what it's going to do. Don't try to be a hero. Take the more conservative approach, and you know, live to invest another day, right? Or just at least take smaller positions.